In this video, we'll go through how to apply price action rules to two different types of market structure. The first market structure we're going to start with is the trend range structure, because you will spot trend range in any market and in any time frame. And the hallmark of a trend range is indecision and prices oscillating between two key extremes. So my goal as a price action trader is to properly identify the key levels, because according to trend range rules, I want to buy low, sell high, and I want to fade the breakout, because most breakouts will fail, despite the fact that most people are trading the breakouts. Generally, the prices will pull back into trend range and the breakout will fail. Now, the best way for me to start identifying the key levels is to use my pre-market structure. And the pre-market structure is simply just the structure before the regular US stock market opened. This is where the stock market US regular hours opened. The black line is indicating the beginning of today's session. So this is the pre-market structure where I'm doing my pre-market analysis. And I'm going to start identifying the low of the day support and the high of the day resistance. And this makes this trend range fit pretty well. And you can see a lot of price swings swinging up and down, flat exponential moving average. And you can also see I'm following the channels, because even inside a small trend range, there are channels being present and I want to follow the trend line rule properly. I can see that the prices are pushing back above the EMA. So my initial support was not being tested multiple times, which allows me to make it a little bit tighter. Nothing wrong with adjusting it a little bit, making it a little bit tighter with more confirmation. And also what I have to do is, since there is a direction for these bars, I'm going to identify the direction by drawing a channel, because I want to stay on the right side of the market. So right now, the bullish channel is present. We're coming off the lows, most likely back to the highs. Just simple trend range structure. We have a new high, first entry long. Am I expecting second entry long? Possibly I am. Because we have a two-legged pullback to be high probability setup. We have two rules that tell me that we're most likely going to go back to the highs. The trend line rule needs to get new extreme after break. And from the low, we're heading all the way to the top. Notice, however, how the signal bar ended. It is at the key entry point, is at the EMA, which is good. Two-legged pullback, but the signal bar is neutral doji. Now, generally, taking setups exactly in the middle of trend range, I'm not too excited about, but this one formed a little bit clean, not that congested, is right at the EMA. However, the signal bar is neutral, doji, not bullish enough, not strong enough, which is unfortunate, because you can see prices kept pushing higher as expected, and market keeps breaking the trend range. This blue rectangle is indicating the news announcement, so you want to be careful trading around the news. So I'm just going to fast forward it a little bit, because we have volatile price action right around the news, and you can already see what the market is doing. Most breakouts, according to price action rules, will fail, and we have two-legged pullback, first leg up, pullback, second leg up. And notice we have the same thing to the bottom. So already I can see first bearish trend working lower, and we have first leg down. Just gonna copy it, second leg down. Market likes to move in pairs of twos, and this is important, because every single time you see two-legged pullback, the chances are high that the market direction will pivot if you are at the important key extreme, which we are. We are at the proven support at the low, and we actually have new low for the downtrend. And this long already is quite tempting, because it is at the low of the trend range. Notice how far away you're from EMA. There is a big gap, and EMA acts as a magnet. It will pull prices closer to it. It didn't tick below this bearish bar, which would have trapped a lot of sellers. Not a bad setup overall. A little bit aggressive. Visual larger two-legged pullback. We never really got high-low confirmation setup. But now that I'm looking back, this setup is actually pretty good, because you're so far away from EMA that the prices will most likely pull back, at least temporarily, that exponential moving average. And notice I need to redraw another channel. We're breaking lower again, and the support is holding again. So I'm definitely liking going long now, but notice the signal bar, a bearish bar again. Support keeps holding. According to range rules, I want to buy low, sell high. Can we get some high low? We cannot. So unfortunately, no real way for me to enter, because we had a bad signal bar. However, I'm going to redraw a brand new uptrend, because just like here, I want to stay on the right side of the market. We're coming off the lows, most likely to the highs. First entry long, pullback, second entry long. It is below EMA. I'm not interested. And notice we pushed above EMA and we formed high-low confirmation setup of the second entry long. And you know that a lot of traders just got trapped selling the failed second entry long, new high, first entry long, pullback, second entry long failure. A lot of sellers got trapped while this uptrend needs to get new high. So the shortened trend is up and this is a high-low confirmation of the second entry long. But it is a little bit stacked, flat EMA, little bit consolidation. I will mark it aggressive, not a bad setup, but generally once it is this consolidated, you prefer to be a little bit patient because you can get whipsawed. You're not at the key extreme. Decent setup overall, just a little bit sideways. And once again, market formed new extreme. I'm following the trendline rule. Two-legged pullback here and another two-legged pullback. So you can see market moves in pairs of twos. I'm looking for prices to go from the top all the way to the bottom. No great signal bar, but notice what we have. Push below EMA, which is confirming the bearish momentum, and we have lower high confirmation setup of the resistance bounce. Great high probability setup. The bar is a little bit big, but it's strong momentum close below, and you're selling quite high, and you expect for prices to go all the way down to these lows. At first, you would draw a channel like this, but as you keep pushing to the downside strongly, I'm actually going to redraw a trade from the lower high. And as long as this channel is in play, I'm not even thinking about buying. You don't really want to draw this channel because it is too tiny compared to the move to new extreme. This strong push down is much longer and stronger than the initial downtrend. So I need to take into consideration the entire structure, redraw downtrend again, and you can see as long as the downtrend is in play, I'm not even thinking about buying. We're breaking lower. Okay, we have a break and move to a new extreme. So another new extreme was formed, and right now we have new low, first entry short, second entry short. Am I even expecting second entry short? Well, I'm going to zoom back. We've been trading a very healthy trend range. This was a tight, healthy trend range, and according to price action rules, most breakouts will fail. So even though it is counterintuitive, I'm not looking for second entry short. What are the clues? Well, the downtrend has a break in new extreme. So sellers no longer have reason to push the market lower because downtrend formed break in new extreme. Another useful tool is you can measure the first leg here, pullback, second leg. So you have a larger two-legged pullback out of the trend range. You can truly see today it is a perfect example how market likes to move in pairs of twos. It is just about the time for you to train your eyes to see it. You need to spend time in front of your chart, get some screen time, and eventually you will train your eyes to spot these two-legged pullbacks with ease. And you can see every single time there's a two-legged pullback, the market will pivot at the key extreme. You have larger two-legged pullback, shorter term one, bigger one, two-legged pullback here, and even tiny two-legged pullback here. So market is truly moving in pairs of twos. So we have larger two-legged pullback. So most likely this breakout will fail again and we will pull back into trend range. We have a break and a new extreme. So if anything, I'm drawing a possible uptrend and we have second entry short. But like I said, not really looking to take second entry short. It is counterintuitive. And when I was starting out, I just couldn't fathom even thinking buying this low. But with time, you will train your brain to think more aligned with price action rules and overall behavior of the market rather than following common sense, because it is scary to buy this low. It is forcing you to question your decision, but this is just how trend ranges are working and how price action is behaving. So actually we have a failed second entry short, which would not be a bad setup. Very tempting already, but it formed below EMA. Had it formed above with a little bit of a bullish bar, I would have even liked entering here because a lot of sellers must have gotten trapped. And speaking about trapped sellers, notice lower high after second entry short above EMA though, on the wrong side of the EMA. So everybody who's going to sell here is going to get trapped. And notice we have high-low confirmation setup of the failed second entry short. You can see off the EMA confirming the wider uptrend. We are expecting for this breakout to fail and go back into trend range, larger two-legged pullback, break new low. I took this setup on engulfing, which means it triggered lower. There was strong momentum, EMA held, trendline held, sellers got trapped. I actually waited for prices to pull back a little bit while still this bar was forming, dropped my limit order one tick back, got filled and instantly made the scalp. You could have actually re-entered again because engulfing didn't manage to get the scalp straight away, so you could have used the chance to drop a limit order at the close here and still would have gotten your scalp eventually. If you waited for close and you skipped, I can see why, no problem, because there was a little bit stim at the top. Context, however, is sometimes, basically all the time, the stronger aspect of the setup. So context can overwrite bad signal bar. Just make sure you don't take two crappy signal bars, because generally the signal bar is a great filter to prevent you from taking a losing trade, maybe if you're reading it wrong. But this is a great high-low confirmation setup of the failed second entry short. EMA keeps holding, and you can see what a strong momentum it generated. I was actually expecting stronger bullish momentum back to the top of the resistance. We have a small break, new extreme, but we created a break in new extreme and we haven't even tested the EMA once. So this is a lot of times indicating stronger bullish momentum. So I was still leaning more bullish. However, we can see that the EMA is not holding at all and market is completely selling off strongly. So this is changing things a little bit, and market keeps pushing lower, and they actually came back and stopped my runner. I never managed to get a runner because since this was a FOMC day, I thought we were not gonna get that many setups prior to FOMC. So I just thought I'm gonna get this one setup, ride it all the way up, because we may not have that many setups. So I was being a little bit more aggressive. Normally I would trail it tight to make sure I'm gonna squeeze at least something out of it. I was a little bit more aggressive. You can see they came back and they stopped my runner. So unfortunately I didn't make anything on a runner. I was hoping to ride it out, but market came back and I just have to switch the direction of the market, because right now we're trending lower. So what am I expecting? I'm expecting to take a second entry short for this downtrend to get new extreme if we get a break. But notice what happened next. The prices exceeded the latest lowest low right here. And now it's a bit worrisome because we can see that we have another big steep leg down, kind of like another visual to like a pullback, and we have a push phase, correction phase starting, push phase, and correction may start again. This is more advanced way how to view price action. So far we've been trading a healthy trade range. We broke lower and we have larger first leg, pullback, and a second leg. So similar thing can happen here. So now it's a little bit worrisome because if you get second entry short prior to exceeding this low, you still have momentum on your side. I'm going to redraw the uptrend. I have first entry short, pullback, second entry short. Now when I was watching this live, I didn't like taking it because of the reasons I just explained. However, I am going to mark it because a beginner trader may not recognize what's exactly going on here. And it's not a bad setup overall. It just really may have stronger bullish correction. So even though I'm not a big fan of this, if you're a beginner trader and you liked it, because it is looking pretty well, I am going to mark it. I was looking for more confirmation if I'm going to sell. The first second entry long formed bad doji. And actually second entry short again, also bad signal bar. And at this point it's getting a little bit stacked. So there was no way for me to enter. You can see bullish bar, and it was actually a good thing because market ended up working back up. So you can see push phase ended, push back up, push phase ended, correction phase is starting. So this is why you want to be a little bit careful taking a second entry short. And now we can see that we are 1 hour before FOMC, which you want to be generally not trading because low volume, it can be really stalling, slow market structure. Everybody's just waiting for the FOMC announcement. And this is the FOMC announcement. So I'm going to fast forward. You don't want to be trading around the news. Pure whipsaw structure. You can have a losing trade and give it all back. All your winning trades you made throughout the day. So just don't risk it. I'm just going to zoom back. Now this should already ring a bell. What kind of pattern is this? I can see that we have break and new extreme, but more importantly, I have first leg up, pullback, second leg up. So another larger two leg up pullback. I have break new extreme, and even if I'm going to redraw the channel from this point, I have small break and new extreme again. So all channels played out. We actually have static highs, but the lows are not as static. So I'm going to have to select the new lows that the FOMC structure provided to me, because you can see we kept pushing lower and the lows were forming lower and lower. So I'm just going to use these lows around the FOMC structure because you can see flat EMA again, very range-like overall. We're pushing below EMA, so I'm going to redraw the downtrend structure. Now I'm expecting from the resistance for prices to go all the way down, just following the short-term channel. Second entry short, a horrible signal bar, I cannot sell. This is much better bar, but there is no trigger below this bar right here. So unfortunately, no way for me to enter. And market kept pushing lower strongly. You can see this is getting quite stronger. So I was even looking for possible wider channel like this. But you can see we have overshoot, which means we can have stronger momentum in opposite direction. Overshoot can break the channel or possibly reverse the market. So I'm going to definitely draw the uptrend to make sure I'm monitoring the bullish momentum. No real way for me to enter right now. And you can see market is strongly reversing all the way back up. Okay. And notice the price action. So right now what we're going to do is we're going to analyze the structure and we're going to move to our second type of market structure. At first, we were trading a trend range structure according to trend range rules. And now the momentum is completely changing. You can see completely different structure prior to what we saw here. EMA pointing up, minimal pullbacks. This is a brand new bullish trend. So what I have to do is I have to identify a brand new pattern. We have a second entry long here to like a pullback, which would be a high probability setup, but it is still far away from EMA. A little breakout pullback of the key level. Second entry long, but it's so far away from both key entry points. And you can see how strong the uptrend is getting. Clearly a bullish uptrend. So right now, the rules are getting a little bit easier. I know that I have a clear bullish bias. Buyers are in control. So right now, I'm just expecting for prices to pull back and for me to get a chance to buy the pullback because I don't want to be buying high. I don't want to be chasing the market. I want to buy the market low when the correction phase will end and preferably in the form of a two-legged pullback at the key entry point. And notice what we have. New high, first entry long, pullback, second entry long at two key entry points. Structure is clearly bullish uptrend. So we have a second entry long. Notice the signal bar, very signal bar. However, I can use double bar entry. I can wait for prices to break above the bull bar and then drop my limit order a couple ticks back and see if I can get filled. However, your stop loss has to go one tick below the bearish bar, the swing low. You cannot move it below this bullish bar and be gambling you're going to survive. No, your actual stop loss to protect yourself has to go one tick below this signal bar. You can see market keeps working higher and the momentum keeps going and keeps going. Okay, so I can see this is a more advanced way how to analyze the structure. This bullish bias is very strong. Notice we keep pushing higher and keep pushing higher. So this allows me to predict continuation of this uptrend and possibly select a little bit better channel. And the reason why I'm doing this is because from the very bottom all the way to the top, not a single close below EMA, minimal bearish pullbacks, EMA keeps holding every single time. So I'm predicting another little bit flatter spike in a channel and notice how perfectly it is fitting. So with time you will get a feel for the strength of the trend. And this is very strong spike in a channel. EMA keeps holding and it fits really well. And notice how it's aligning with the trend line, the EMA. So this is giving me confidence that this setup, this pattern overall is the proper pattern. So we have congestion here. We even had congestion here. I'm not interested in taking setups in this congestion. I'm looking for prices to break and fade the breakout, but we never really truly got the proper close outside. It was a little bit still halfway there. We have a high low, which never got a trigger. And then we have a second entry short failure. New low, first entry short, pullback, second entry short. Actually, I forgot to mark this setup. And now we have a failed second entry short setup. Great tier 1 signal bar. EMA keeps holding. You expect new extreme for the uptrend. And you even have second entry long, which is more aggressive because right now you're closer to making these highs. But EMA keeps holding. The structure is very strong uptrend. You know you're probably going to make the push to a new extreme. And a quick scalp was made. So I'm going to mark the new high. And the trader asked me, actually a couple of traders, if it's okay to scalp for more than 2.5 points, it is completely okay to go for 1-to-1 risk to reward, to go for more when it comes to your target profit. A lot of traders have been successful with scalping for much more than 2 points. You just cannot be that aggressive. It is the perfect scenario. If you're taking these setups close to these highs, you should be mainly scalping. But if you're buying low, the healthy correction phase, the healthy two-legged pullback, there's a big chance the high probability setup will produce a significant move in the market. So you can definitely go for 1-to-1, let's say, but you cannot be as aggressive as when you're just looking for the 2 little points, because normally you would not trying to swing if you're so close to making the new extreme. And now you made the new extreme, so the long setups are paused. I'm expecting correction, break new high. I'm expecting correction, but I'm not reversing the market because structure was a very strong bullish uptrend. So I'm just following the trend. If it's this strong, I expect continuation more rather than brand new reversal. Anything can happen, of course. I'm going to adapt. If there's going to be a confirmed downtrend, I'm just going to adapt and look to sell. Right now, this was the prevailing market structure. Okay, we're pushing above EMA. Okay. And notice we have high-low. Can we get a filled second entry short? We can't get filled second entry short. Have we got filled second entry short? Would have been a great setup to take. You can see a lot of small bars. Just keep working hard, keep working hard. Very strong uptrend. At this point on, this is giving me clues. Okay, this is a very strong uptrend. I was even looking for possible multiple uptrends. So I was drawing a spike and a channel like this because this is just such a strong uptrend. There must be some bigger pattern. Okay, we have a new high, first entry long, second entry long, but there was no trigger. We triggered above bearish bar, we cannot take it, and no trigger above bullish bar. And now we're breaking lower, so I need to redraw my channel a little bit like this. Okay, we have a visual second entry long. It's actually a third entry long, but it's still in the middle of no man's land. There is no trigger above these bars, no trigger higher, so nothing, and market keeps pushing lower. I'm just letting this correction play out. I'm not even thinking about selling. The main trend is to the upside. I'm just looking for correction phase to end and to buy high probability setups. And don't be too worried that you see prices going higher on these first entries. That's okay. It comes to the territory. Just wait your turn and high probability setup will form. Okay, you're pushing above EMA, so this is a good sign for bulls. At this point on, I'm resuming my bullish bias again. We have high low, but the downtrend doesn't have new low. I cannot take high low just yet. By the time we get a filled second entry short, it's too far up, not close enough to EMA. Okay, we're pushing lower and we're pushing back up. And notice what's happening. Okay, so this is the final clue that the bearish momentum depleted. Sellers attempted to create new extreme, failed, pushed above EMA, which confirmed how strong the bullish bias is. And we have a second entry long, new high, first entry long, pullback, second entry long, right at the EMA, right above it. Great signal bar. You expect new high for this channel. Overall bias is bullish. And look at the great high probability setup and what it generated. There actually ended up being better channel which you can find with more price action adjusted a little bit later. Something actually, I believe something like this. Yes, this fits really well. Eventually market formed overshoot, which led to a break. And now we're close to market closing. So this is how to follow the price action rules. Strong uptrend. You're looking for channels. You're working with the EMA and just waiting for prices to pull back in the form of a high probability setup at the key entry point. You're not thinking about selling. You're just observing these trends to the downside as reversal attempts, which most of them will fail. So they're just corrections. And overall, we start with the trend range, very healthy. And you can see you're applying completely different rules, but this is what you have to do. Not every single market structure is the same. Look for two-legged pullbacks, buy low, sell high, and fade the breakouts, because most breakouts will fail. And you can see when there's a two-legged pullback and a new extreme, the market will pivot. So I hope you find the video helpful and good luck with your trading.